Good morning, everybody. It is Monday, August 7th. My daughter's birthday, my eldest, is on Wednesday, August 9th. Everybody subliminally wish her a happy birthday. We are just coming on 6 a.m., and it's been a sympathetic overnight. I'll bring you over here quickly on your futures. As you can see here, these are dead cat bounces that we're getting off of the lows that came off of Friday. Nothing spectacular that we're looking at in any way, shape, or form. ES futures are up 17 points, the NASDAQ up 86 and a half, YM up 87, and the Russell up 6. And again, we did sell off very aggressively on Friday towards that last half of the session. So it is something to be aware of. That's about it. Four red closes in a row. Like we say, markets don't bottom on Fridays when you get those sell downs into the end of the day. So we are looking for a lower low, whether it's today or it's tomorrow, and be very aware that you have CPI coming up on Friday or on Thursday. Now, again, tinfoil hat, all you like, but this is your QQQ, your Russell, and your SPY. And I want you to take note here how you've got this fake print that came out here at 8 o'clock last night, 8:15, over on the QQQ, 382.97. Same time, you got a fake print over here on SPY, 460.26. Now, the reason we refer to these as fake prints is these are prints that did not occur in the previous trading session. So, with that in mind, and because of where those strikes are, as we have CPI coming up later this week, we are expecting a little bit of a lower low. It is definitely something to be made aware of, and I will share with you my thoughts in the email on how I would play that, which I may actually get involved with because I have looked over here at the pricing. I'm looking at some Friday calls, and they're actually very worth it. So I'll share that with you. So again, here on the SPX, we did get a nice range day over there on Friday. We do have four red closes in a row. That's not the same like your green closes. We have had, I don't remember when, and I'm sorry for scrolling you on a Friday or on a Monday morning. I cut it off already, so never mind. But yeah, here, like we did have four in a row going in May, and then we had a big day right there on May 5th. We are looking for a lower low. So that's what we are looking for. And then from there, we'll make adjustments. Come on over onto what we're at. And again, for the week, we've had our move, and this move on Friday afternoon after we hit that 5-day moving average, 45.40, and made that very aggressive move to the downside. What we'll have here today, which you can't see the blue, but the 5-day moving average will be below the 20-day moving average, which is obviously very bearish. The 10-day will still be above the 20-day, so that has not flipped yet. But that 5-day moving average will be your resistance area up on the top side. I like 45.15. That's me. I like it. I like 45.15 for being our top end for the day. Still have a fractional tiny little bit of a gap there from July 12th. And then you have that other gap down, or July 13th, and this is your July 12th gap, which we already talked about. Very fulfilling if we could fill that gap, get down right around 44.60, 44.65, touch the top of this gap perhaps, and or even fill it and avoid touching the 50-day moving average. So a little bit lower that we should be headed to as we go into the early part of this week. A couple of plays here. Apple, big sell down off of the earnings, well below the 50-day moving average, just down here onto 180.75. And again, with the expectation that we should get a fractional little bit lower, this may be a good play for a short term, medium term, for a relief bounce back up to around 185. See, don't want to hear that. We had news this morning right around 5 o'clock. Feds Williams rates may come down next year. Today, nothing other than Feds Bostic, Feds Bowman, and tonight, China with their trade stuff. Go back over onto the charts again, and here, Amazon, fractional dip below 140 over there at the end of the day on Friday. Big gap to be filled. I'm still playing this for the fulfillment of the gap. That's why I bought the time and the strikes that I bought. And that 143.55 did its job, doing its job. Fractional little gap going back to the August highs at 144.86. So, could be in play. I'm not saying it is, but definitely a indicator for you that if you get below 140, you should be able to start seeing more movement towards your fulfillment, which breaks down at 137 and gets down to around 135. Don't rush it. Got plenty of time on these. Palantir is going to be reporting today after the close. For me, Palantir is going to be 1650, 1450 after they report. Don't care what they report. I couldn't even tell you what the company does. I'd like to see it get up here to around 21 and then be able to play it back down for 17. But then again, Palantir is not cheap, not only for the earnings, but for any other day of the week, because it is now one of your meme stocks and where everybody's at. And you see here your implied volatility going out weeks and weeks and weeks, 100% built in, 125, 106, 177 for this week. So absolutely no way in hell I will be playing this ahead of earnings. So again, here's your SPX. That's what we're looking at. A little bit lower. And over on the QQQ, pretty much the same thing. We are going to be looking at, again, see, here's your fake print. That fake print, you got another fake print from over here, which didn't work out. Fractionally lower low, if we get below that 373 area, touch in, maybe even fill this 330, 368 gap, and then have the energy with the buy divergences that I talked about that we could get a move stronger back up to the upside with CPI. So we're trying to see CPI before CPI happens. And as of right now, 6 a.m., my upper safe edge would be around 45.32. And 45.23 would be your plus 1% area. So strikes, very easy to pick. VIX doing pretty well over here at 17. See you guys in the chat room.